afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Brian Fernandez and with me here is Samantha Voon. Now, let's start by taking a look at a market summary of market action. Sam, over to you.
All right. So overnight in the US, all three major indices ticked down. Inflation in May slowed to its lowest annual rate in more than 3 years, with the core personal consumption expenditure price index up just 0.1% last month and 2.6% higher from the prior year and in line with the Dow Jones estimate. So the core PCE index, which strips out price of food and energy is the Federal Reserve's preferred inflation measure. So headline PCE, which includes food and energy, was flat on the month and up 2.6 on an annual basis, also in line with expectations. The S&P 500 slid 0.41%, while the Nasdaq Composite declined 0.71%, and the two average hit new all-time highs, intraday highs earlier in the session before pulling back, and the Dow Jones Industrial Average dropped 0.12%. In Asia Pacific, markets started the second half of the year mixed as investors assess June business activity data from China as well as Japan's business confidence readings. In China, they released its official PMI figures on the weekend, with its manufacturing PMI coming in at 49.5, unchanged from May and marking its second straight month in contractionary territory. A private survey of manufacturing activity, however, diverged from the official numbers, showing the sharpest improvements in business conditions in 3 years. The S&P Caixin PMI climbed to 51.8 in June, compared with a 51.7 in May. This morning, Japan revised its first quarter GDP contraction to 2.9% year-on-year from 1.8% reported earlier. GDP data for the first and fourth quarters of 2023 were also revised downwards. In a technical note, the country's cabinet office said the revision was due to a new construction investment data. In Japan, the Nikkei 225 rose 0.26% to a 3-month high, while the broad-based Topix climbed 0.49%. Confidence among big Japanese manufacturers improved in the second quarter, with the Bank of Japan's Tankan survey at 13 points compared to 11 points in the first quarter. South Korea's KOSPI was flat, but the small cap Kosdaq advanced 0.76%, and the country saw its factory activity expand at its fastest pace since February 2022, with its June manufacturing PMI up 52.0 from 51.6. In mainland China, the CSI 300 was down marginally, and in Australia, the ASX 200 fell 0.23%. In Hong Kong, markets are closed Monday for a public holiday.
Now, to give us insights into the markets, we have our regular guest, Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming to us out of Singapore. Vishnu, as always, great to have you on the show.
Always good to be here, Brian, Sam. So thanks for having me on today.
All right. So, Vishnu, let's start by sharing your views on the political and election risks that are worrying investors. Tell us more about that.
Well, I mean, it does, in many cases, there's a bit of a hangover from the debate between, President Biden and former President Trump. So the latter came out swinging, even if there's, some gaps in the facts, so on and so forth. That didn't stop him, really bulldozing many of the points that pointed towards things swinging in his favor. In particular, pointing out that Biden's age is a major impediment and a risk in terms of running the country. So whether it's perceived or real, that's gained traction not just with the Republicans but even within the Democrat camp. Resistance to, however, replace the candidate is Biden is of course understandable so late in the game. Also comes with its own set of risks, but it appears now that the unforced error on the part of Democrats could lead to Trump 2.0 solidifying as a risk, and that means that apart from what it means for the US, within the US, I think a greater consequence would be for the rest of the world, because now, allies and adversaries alike need to scramble to think about what that means in terms of policies, geopolitics, and a whole host of issues. So that's one aspect of it. So that's that US risk really weighing on the rest of the world. French election also, pushed Macron's party to third place. Le Pen in the first round has got over a third, in terms of the votes and so on and so forth. So that ought to bring up French risks, but French risk has been incrementally and fairly profoundly priced in over the last few weeks. So counterintuitively, the euro is up. Second round elections will be watched, but before that, UK elections up this week as well. And there it might be a quite different story, because even if the Conservatives lose, as they're expected to, given the polls, if the polls are right about the gaping lead that the Labour Party has, that could actually be relief for the sterling and UK assets, because the general sense seems to be that at least some spending on the part of Labour would move the economy out of stagnation. So it's an entire mixed picture, but the two things we don't lose sight of are overwhelming risks associated with geopolitics, and some of it being derived from US politics, means that it is difficult early on to discount the lingering risks from a stronger dollar, and the inability to predict what happens in terms of US policies and how it impacts the rest of the world.
So Vishnu, then, okay, I'm going to take you up on your point around the stronger dollar. Now, this is despite softer US inflation. What is your view on the yields, again, given all these risks?
So, we have seen yields move up, defying the soft inflation data. So it's not as if markets did not celebrate it, because to be fair, in the run-up to PCE, when CPI and PPI numbers were released and the softer numbers were encouraging markets, they did acknowledge the softening in inflation. But to some extent, this is crowded out by two other effects. The first effect is the foreseeability of it. So not only could they foresee this from the CPI, PPI, so pricing in ahead of time, but Powell as well, during the FOMC press conference, went on to say, yes, they too anticipate the softness that's coming through, but they expect that inflation will re-accelerate in the second half, which is why their year-end forecast is 2.8%, higher than where it is now. So they're saying, look, it's not a smooth path. We still need to assess. So it quickly diminishes the prospects of an imminent Fed easing just on the back of the data. So that's one effect of it, which is what's holding up yields. The other is, if that wave of anti-incumbency leaning towards populism actually pans out, it's going to lead to a lot more government spending. And government spending can create two issues. One is it may keep inflation stickier for longer. The other is it creates a lot more debt issuances, and neither of which is going to give us a lot of confidence about yields coming down. So yields may be propped up for higher, at its elevated levels for longer than it's ideal for the world economy. But of course, I'm going on to the next stage where this then starts to punish the growth. But that's me being miserable on a Monday.
Okay, so Vishnu, we have the US job data end of the week after midweek of FOMC minutes. What are markets' expectations after this?
I think for the FOMC minutes, it's going to be a case of a lot of the hawkish restraint that remains in place despite softer inflation. I think that theme will continue to play out. There's a little bit of prospects of markets taking some relief in the fact that that big revision down in the dot plot from 3 to 1, a lot of it were quite close calls, and some would have left it at 2 instead. So there may be some relief, but nothing really to write home about because political risks, I think, it's a week of minutes. You've got RBA, you've got the ECB, you've got the Fed, but it is the hour of politics. So politics takes center stage, and I don't think we're going to distract from that. And jobs data is the slow-moving beast here. I think there'll be softness that comes through in one form or the other. Not enough of it will be reflected to compel yields to move down significantly and durably. So that one is a slow burn, whereas we're all now watching political houses on fire. So I don't think anyone is going to pay attention to the slow burn jobs data, and the risk that they focus on for now is politics. And the big takeaway that they are not distracted from is not quite yet. Higher for longer is still, in the room.
Mhm. All right, Vishnu, thank you so much for being on the show.
My pleasure as always. Thanks for having me on.
Be sure to be informed with the latest market updates with BizTech Asian Midday Market Watch. This has been BizTech Asian Midday Market Watch. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.